This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surbhi and Nigel. Guys, hi, good morning. Trust everyone saw the match.
What a game.
What a game.
What a game.
Come on!
Just when you thought the batsman, so I actually, I was a little tired and sleepy. You had to stay up to watch the batting. And just when you thought the batsmen have put on this great show, comes a gentleman called Mohammad Shami.
Oh, it was absolutely a thriller, and for the first time, I think, in the tournament, we were feeling a little bit challenged at one point of time. I was with this, I was having dinner with this senior ex-banker, and then he also was getting a little iffy. He said, Nigel, just don't move from your seat. So we were not moving. Then the kids were moving around. Normally, they're allowed to move, but they were also told not to move. And luckily, the wicket went, So it was a splendid performance. The batsmen, they deliver the goods. Shami, what do you say about him? Wasn't a semi-final, it was a Shami final.
No, actually the entire team pulled together, right?
Absolutely.
And,
super.
Is absolutely stellar performance, all-rounded performance, and as Nigel said, batsmen, the bowlers, everything coming together in a perfect way. So
and captain Rohit Sharma,
Absolutely.
After that flying start.
Quick 47 runs,
Yeah.
and then coming in there and marshalling, his forces.
And then the records breaking, Virat Kohli, taking on the mantle from Sachin Tendulkar.
It was an epic one. So, I think...
Let's keep something for the final.
Exactly. Yeah. So the second semi-final is today, and of course, we'll decide who we play. Not we won't decide, but the semi-final. The second one will decide who we play in the finals. But for the market, let's just direct our energies back to how things will be this morning, right? Was yesterday the semi-final for the markets, and today, not a final, but the path to some sort of a climactic actions, down the year. That's the question that we want to begin the day with. So this is what you want to know as far as the session this morning is concerned. We had a super Wednesday. And once again, to use the same sort of, phrase, do we have, is a more clearer line of sight to newer highs opening? That's the real question, which I think we need to kind of deal with. And if that is true, how do you need to position yourself? And those are things which come later. But I think the answer, to my mind, has been that way from the time that we had the FOMC, which is 2 weeks back, is that yes, it was a very significant last Fed meeting. The CPI number has only reinforced the expectation that the hiking cycle globally is done. And yesterday was a complete global rally. It was not just in India, 1.5% move higher, but it was a global rally. So let's just rewind the clock back to last night. We had a flat close for US equities. S&P was up 0.16. The Nasdaq was absolutely flat. You had data which came through. So retail sales numbers were resilient. This is for the month of October. After CPI, we had the producer price numbers which came through, and they were softer. Some are pointing to and complaining about some hawkish nuance in the PPI, but overall, at the headline level, the producer price numbers, like the CPI, were soft. So it kind of, once again, reinforces those expectations of a soft landing, which is the fact that inflation will cool down and the economy will not need to slow down very severely. Now, this is the yield. So there's a bit of an uptick, 9 basis points on the 10-year. We are back at about 4.54%, at least, on the rate side, we've not had a big follow-through. Actually, if anything, half of the fall that we saw in yields, pullback that we saw in yields, it's kind of come back. So watch this. Dollar index, about 1/3% higher, 104.38 in the dollar index. Oil is down almost 2%. We're at about $81 now on Brent oil prices. So it's an okay kind of a handoff, once again, from Wall Street. It's obviously not what we woke up to yesterday morning, but those are rare days. But there is nothing damaging really here. Now, the Nifty high, just to come back and circle back to levels that you need to watch out for, the high yesterday was 19,693. That is, by the way, exactly the 61.8% retracement. So that's the first level which becomes important. It's a bit of a pivot, both on the way as the market moves higher, it becomes a bit of a support. And if the market dips a little bit, that's the level to take out. But the high yesterday was there, and we closed about 10-15 points under it. Next is the upper Bollinger Band for the Nifty, which is at about 19,785. That's the first level. And then after that, the October swing high for the Nifty is 19,843. You know, when we talk about all-time highs, it's not very far away, but even from where we are now to that level, these are the levels that the market one by one needs to take out. Support comes in at the 40-day exponential moving average, which stands at 19,455. Of course, with a big gap like yesterday, it tends to leave some of these levels behind. Now, for the Bank Nifty, similar kind of pattern. The next resistance for the Nifty Bank is 44,700. That is the 61.8% retracement for that particular index. We left off at 44,200. And the 40-day exponential, which is, 43,891, that is basically the support on the way down if the market starts to sell off a little bit. The Gift Nifty will come up on your screen, and I think that will give us an indication of how things are likely to start, about 30 points higher. I would say just about right, given the fact that from overnight, we've not had any bombastic kind of cues or anything of that sort. Once again, the idea would be, yesterday was very different. It was one of those rare days where you could buy after the open and then hope to make money, and you actually did. Not very much after that, because at least on the index, we only added a few, not a huge deal after the opening levels, but we managed to end higher. But those are rare days, as I said yesterday as well. Typically, you want to buy dips to be able to sell higher, especially if you're trading intraday. Surabhi.
Absolutely, Prashant. I mean, just to add to the point that you made, I guess we're continuing to get more good news on inflation. That's one aspect of it. So I just want to reiterate that number that came out yesterday, the producer price number in the US, which is a measure of wholesale prices. Just because it's a pretty significant one. I mean, that the decline there is, the pace of decline is the sharpest we've seen in not many months, but many years. In fact, the biggest drop since April 2020. That's a 0.5% month-on-month decline that we got on the US PPI. The second good news on inflation is coming in from the crude markets. Brent, by the way, is close to $80 a barrel, because the buildup that we had in stockpiles was massive. And the data was coming after a gap of a week. Last week, there were some technical upgrades, etc. So EIA didn't release the data. That's the US, Energy Administration. The buildup was 3.6 million barrels. The market's expectation was 1.5 to about 1.8. So huge rise in US oil stockpiles, and therefore downward pressure on oil prices. So again, two good news points for inflation. But beyond inflation, I'm actually tracking all of this diplomacy between US and China a little more closely today. Now, it doesn't impact the market today, but it's important to track from a medium-term basis. Remember the whole China +1, the whole shifting of global supply chains. Not saying that gets unraveled in a day, but it's important to track these things on a longer-term basis, because that's very significant statements. The body language seems very positive. It was the first meeting between the two leaders in over a year, first physical meeting. It took place in San Francisco. And look at President Biden's statement immediately after that. The tweet is up for you. He is going, and the operative word is, today we made real progress. That's what he's saying. So all the commentary is exceedingly optimistic. He went on to say that critical global challenges we face, from climate change to counter narcotics to artificial intelligence, demand our joint efforts. So the conversation, the nuances are very, very sort of reconciliatory, if I were to say that. Let's see what Mr. Jay said. For two large countries like China and the United States, turning their back on each other is not an option. Planet Earth is big enough for the two countries to succeed. So yes, there's a lot of diplomacy involved here, high-level statements being made, but they're all on the positive side. It's something to keep in mind from a more medium-term perspective. So that's one. But coming back to the here and now, yesterday was interesting. Remember, I was pointing out how FII selling is reducing in the market in November. We had a buy figure on the big bazooka day yesterday when a lot of levels got taken out. So we have about 500 crores of net positive buy-in from foreign investors, and domestic institutions were buyers to the effect of about 600 crores. So on the flows picture, we're pretty positive, which brings me to the question, when FIIs start coming in, banks start performing. We saw the first hint of that yesterday. Let's not, look at what's happening with Bajaj Finance as a separate issue with respect to that particular company, but largely will banks and financials, will they start taking up the leadership mantle? I think that's something I'll watch out for today, Nigel.
Well, as is the case with cricket, when your top batsman does well, it makes the batting lineup feel so good, right?
Rohit Sharma.
Rohit Sharma or Virat, whoever you want to refer to. So the Nifty Bank in that context, it's done a little bit of an underperformance. Yeah. And now it's reaching this crucial technical zone. So let's pull up the Nifty, and we can pull up the Nifty Bank, and maybe we can map the 50 and the 100 DMA mark. Now, in the Nifty, yesterday we went ahead and we conquered that mark. That's the 50 as well as the 100 DMA, mildly above that level. So that's looking quite good. Now, on the flip side, you look at the Nifty Bank, well, it's reaching into that congestion zone. That's 44,230 approximately to 44,500. So a little bit shy of that level. That's the crucial resistance mark on the Nifty Bank. So I'll want that, the bulls will want the Nifty Bank to go ahead and conquer that range. Now, on the flows, as Surabhi said, yes, the FIs, they turned buyers. I'm looking at the net institutional flows, and that number looked very, very good at more than 1,000 crores. The last time we saw a number as large as this or anywhere close to this was on October 23rd. So in that sense, that net institutional number is looking pretty good. The FI's positioning, now they're adding long positions. Yesterday, after a while, they added more longs than shorts, close to 4,300 contracts. And now the short positions have come down to around 80%. Remember, at the peak, it was close to around 90%. It's come down to 80%. And if you pull it up in absolute contract terms, well, the FI short positioning in contracts has come down from around 175,000. Well, that's come down to around 143,000. That's close to around 30,000 contracts that have got covered out. And that explains why a bit of a bounce that we've seen. So till now, we've seen short covering. Let's see whether the flows picture turns positive. Maybe that's the other factor that drives us back to around that 20,000 mark. Two strikes were active, 19,600, 19,650 put. Between them, they added more than 2 crore shares, and there was writing being seen at those levels. So since there's writing been seen there, 19,550 to 19,600 becomes a very, very crucial mark, in terms of a support level. Just for the day, remember, we have weekly expiry as well that plays out. And the 50 DMA as well comes back in that range itself. So that's crucial. The Nifty Bank, if that can get past the 50 and the 100 DMA, then we're taking the Nifty closer around the 20,000 odd mark. And it'll obviously help this journey because till now, the Nifty Bank has been a bit of an underperformer. The gift Nifty was suggesting a mildly flattish to a positive start. You like to look at that. And I think you need to buy those intraday dips and you need to participate on the long side, just going by the texture of the market. Broader market party will continue as well. And that's looking quite strong.
Okay, well, so that's basically all you need to know as we start another trading session. Before we go any further, let's quickly tell you what is lined up here in the first half hour of the show. We have our research team joining us with a list of top 10 stocks for the day coming up after the global setup, which is right now. At 8:30, we do a fundamental stock check with Deepan Mehta of Elixir Equities to understand what he's making of specific stocks in the market as a whole.
Okay, so all that's coming up, but we kick it off with the equity call of the morning, and this one's coming in from Sanjeev Prasad of Kotak Institutional Equities. He says the outcome of various events in the next few months could determine the performance of 3 distinct markets in India. In H1 CY24, he says mega caps are in a bear market, large caps and quality mid caps are in a bull market, and mid and small caps in general are in a bubble market. He prefers mega cap stocks, noting their reasonable valuations, and sees low returns for the broader market in general.
Okay, well, let's get you some money market views now. We have Parul Mittal of Standard Chartered Bank, who says that the USD INR saw downward buys after touching record highs last week. She says the impact of a weaker dollar post-US CPI data and lower oil prices were offset by record trade deficit. She expects the dollar INR pair to trade between 82.9 to 83.25 to a dollar next week. She adds dollar, oil, and buyer sell activity of public sector enterprises will be key drivers for forex markets.
On bonds, Parul says domestic yields eased last week, tracking the sharp drop in global rates post downward US CPI data. Surprise and inline India CPI data. She expects the 10-year benchmark bond yield to trade in a range of 710 to 730 through the week. In the absence of key triggers, she says global rates and oil prices will stay key market drivers, and with system liquidity in deficit, OMO sales fears have ebbed in the near term.
All right, then. Well, as to data prints in the United States indicate that inflation could be potentially closer to Fed's target. Let's listen in to some important opinion on what could the Fed do next in terms of rates as well as the inflation trajectory.
We felt there was little chance for another raise in December. There's one more FOMC meeting this year in December. I think it completely took it off the table for now, and I think we can look toward next year. We're in a pause. Our sense is that the Fed is pretty pleased, given that, as recently as March 22, it's hard to believe, right? 18 months ago, they were still buying $120 billion in treasuries and mortgages a month. They clearly waited too long. The first rate increase was 15 months ago, and I think it was June or July 2022. 550 basis points, unprecedented, and yet the economy is moving forward, and frankly, the bond and equity markets are kind of in balance.
November is one of the very best months of the year. It's certainly proving to be great news on inflation. What I would say is that Jay Powell has to be on the lookout. We are slowing. I'm not saying we're going into recession at all, but he has to be as sensitive to the real data going down, as he claims he's so hypersensitive to that inflation data. I really think the next move is going to be a cut, even if there isn't a recession, just because of the slowdown. I would say it's all clear on the inflation front.
Okay, so when is he going to cut next? That's the big question for Jay Powell. We'll take a break on that note. On the other side, our list of top stocks to watch this morning, coming up in just a bit. Welcome back. Well, the story is that Asia is actually pretty red and downbeat today, basically taking some money off the table after a stupendous rally yesterday. That's the picture. So perhaps we'll get a slightly cautious start to begin with. Those are some of the key markets. Hong Kong Hang Seng is the one that's the lowest. By the way, did you know that Kospi, South Korean markets are starting trade 1 hour later today to try and ease traffic? I'm just wondering if anyone in Mumbai is listening. They've got exams and all happening in South Korea this morning, so they've just opened the market an hour later so that people can get from A to B. Anyway, let's quickly take it to our team as promised and get you the list of top stocks to watch out for. We're kicking it off with what else but Bajaj Finance. RBI action came through last evening. Abhishek, tell us more about it.
Well, as you mentioned, RBI has taken action against Bajaj Finance. They have asked Bajaj Finance to stop sanctions as well as disbursals of loans under two key lending products, that is e-com and Insta EMI cards, with immediate effect. So action is against the non-adherence of the company to the extent of digital guidelines that were issued by RBI last year, that is in 2022, with respect to non-issuance of key fact statements to borrowers. Supervisory restrictions will be reviewed upon the rectification of the said deficiencies by RBI to the satisfaction level that will be done by Bajaj Finance. Details of the products is that total EMI cards issued, that is card in force, is about 4.2 crore as of Q2 FY24. It grew by almost 22% YOY and about 10% sequentially. In Q2, the EMI cards acquired grew by 30% YOY and about close to 6% quarter on quarter. Now, Bajaj Finance has responded in a press release. They mentioned that there is no material impact with respect to financials of the company on account of the RBI action undertaken. They'll rectify RBI's observation and comply with RBI's direction at the earliest possible. We have a brokerage note, IFL Securities, who has written that EMI cards acquisition accounts for almost 18 to 20% of Bajaj Finance new customer acquisitions, and these cards form an important part of the fee as they form almost 2% of AUM with respect to the fee income garnered by Bajaj Finance. Back to you.
Right, Abhishek, thanks very much for that. The stock was down yesterday in a market which was roaring higher, so maybe the street had a bit of a sense of something, apprehension. That was clearly visible in the stock. More on this story later as we go along, but ONGC is the next one which is in focus. Sonal has got details on this one. Sonal, hi, morning.
Good morning, Prashant. Well, they held a conference call after earnings yesterday and they did talk about volume growth going ahead. They said that they expect commencement of oil production from KG Basin in November 2023 and gas from April or May of 2024, and that was the next volume kicker for the company as well. This will increase oil production from 10,000 barrels to 45,000 barrels and gas to 10 MMSCMD by FY25. Additionally, interestingly, they are also exploring two petchem projects, the way Petronet LNG told us after their earnings, and this will entail an investment of 1 lakh crore rupees. This is by 2028-2030, and this will be via the JV mode. They are still considering it, and it's not a final decision. New gas fields, they will attract 20% premium over APM prices, and they will be adding 6 to 8% volumes every year from new gas fields, enjoying that premium as well. Motilal Oswal, they reiterate their buy on the stock with an 18% potential upside. Target price is at 235 rupees a share. Morgan Stanley says that production growth after more than a decade of decline that the company has seen will be in the next leg of outperformance. They highlighted that on the call and that it is now largely de-risked. So volume growth going forward will be the big kicker for ONGC.
Okay, thanks a lot for that, Sonal. Well, let's go back to Abhishek. He's here because he's tracking two more stocks, Paytm and RateGain. Abhishek?
Well, Nigel, to begin with RateGain, sources say that they have launched a QIP of 600 crore. Base issue size is about 400 crore and the oversubscription is about 200 crore. That is what they have kept. So last closing price was around 712 per share. So it looks like the indicative price that they have formed is about close to 9.7% discount to yesterday's closing price. The SEBI floor price is around 676.7 per share. So the indicative price of about 643 per share is at a discount of close to 5% to SEBI floor price as well. Paytm, they have partnered with global travel technology company called Amadeus. That will be done to redefine travel experience with artificial intelligence. So partnership should help Paytm stock gain in trade today. Back to you.
Okay, the only thing is we don't know who's getting paid how much in this partnership. But I think these things unravel with time, so we'll wait for that. Thanks very much for putting it on the radar for us, Abhishek. Let's move on then. We have some more stocks in news. Sonal is tracking them for us. Sonal?
Well, three stocks on my radar. Let me start with Dabur because Dabur and Dermoviva, they have been dismissed as defendants in federal cases in the US, and now company is dismissed for lack of personal jurisdiction as well. Neither Dabur or the other company, they manufacture or sold hair relaxer products in the US. It has been the outcome of this particular case. VST Tillers, they have unveiled 3 new tractors at Agri Technica in Germany, which also includes an EV tractor. So they have issued new range of products in this particular conference. TCS has set November 25th as the record date for its 17,000 crore rupee buyback. The company will buy back up to 4.09 crore shares at a price of 4,150 rupees a piece. So these 3 stocks on the radar today.
All right, Sonal, thanks very much for that. More with Vivek. He's standing by. Vivek, morning.
Well, good morning. Quite a few stocks on my radar as well. Some slight negative news flow coming in as far as United Spirits are concerned. The street is keenly anticipating the outcome and a positive outcome of the UK FTA negotiations. But at this point of time, sources to network, the government sources to network 18 indicate that, this point of time, the India-UK trade negotiations are taking longer due to the tough negotiations that are going on. Negotiations continue on a lot of other issues, including alcohol tariffs, which is key as far as United Spirits are concerned, given that the raw material price is something that will be impacted. The next stock on our radar is Suzlon. Some positive news flow coming in. The company's new turbine segment, which is a 3 megawatt to 3.15 megawatt wind turbine series, has received a positive RLMM listing from the government. The RLMM is the revised list of models as well as manufacturing. So this now allows Suzlon to go ahead and commercialize this particular project, this particular product. Now talking about Vedanta, some more positive news flow coming in over there. The company's arm, Malco Energy, has incorporated a subsidiary which is Vedanta Copper International. Along with that, yesterday, Money Control reports that the company has gone ahead and dispatched its first consignment of green aluminium, which basically means lower carbon intensity aluminium, and they will now be supplying close to 300 metric tons of low carbon billets to Global Aluminium, which is their first Indian domestic customer.
Okay, all right. Interesting development there. Thank you, Vivek, for all of the details. With that, let's quickly recap our list of top stocks to watch today. The ones that have positive news flow around them are ONGC, Paytm, Dabur, VST Tiller Tractors, TCS, Suzlon Energy, and Vedanta. The ones that have negative news around them are Bajaj Finance, RateGain, and United Spirits. Okay, with that, let's turn our attention to commodities. Manisha is joining in with the latest. Manisha, good morning. What's top of mind for you?
Thank you for that, Subi. Well, I'm looking at the crude oil prices because we have seen prices extend decline in the month of November. Remember, October was a weak month as well. So this is going to be a second straight month where we are trading in the negative. $80 a barrel, just about holding for the Brent prices there. Well, to deal with, you have the U.S. crude output, which is now at a record high of 13.2 million barrels per day. Apart from that, the U.S. inventories have continued to rise as well. The latest shows 3.6 million, which is more than double than what the street was anticipating. So there are more than enough supplies in the market right now. So if the markets were getting scared about deficit in the fourth quarter of this year because of the cuts from the OPEC and allies, the U.S. output has been much on the higher side. Add to that the fact that the China oil refinery output also has eased in the month of October. The China economic data not so well. And then there is a statement from IEA saying that the oil markets are not as tight as perceived earlier. All of that seems to be weighing on to the markets, and we have seen 1.5% of decline yesterday, and a percentage point of a cut is how Asia is trading with right now.
Okay, well, Manisha, thanks very much for that. We'll take a quick commercial break here. We'll come back and we'll have Deepan Mehta, Director at Elixir Equities, and we'll talk fundamentals and specific stocks with him in just a bit. Okay, and a little after that, we'll also be joined by the management of KRBL to discuss the company's performance for the quarter gone by. But more importantly, how is this quarter panning out? Stay tuned.
Welcome back. Hope you're having a good morning. Well, plenty of stocks to discuss. We just ran you through the top 10 list. We also told you about market setup. So let's get to some fundamental analysis. Deepan Mehta, Director Elixir Equities, joins us on the show. Hi, Deepan. What do you make of this piece of news coming in on Bajaj Finance? Clearly, yesterday, the street sensed something. I'm not sure whether, this was it. But the stock saw a sharp fall at around 2 p.m. yesterday. We're looking at various brokerage notes, and they indicate maybe it's just a near-term hit. But what would you do? Would you be a buyer if it dips a little bit more from here?
Good morning, Nigel, and thank you for having me on your show. Yeah, a bit of a disappointing news, and I don't think it's going to have a material impact on the performance of the company, but certainly the sentiment may get sour for a few trading sessions or thereabout. We saw this something similar play out in the HDFC Bank case also, when actually they were banned from issuing any new credit cards, and that hit was even more damaging. So I think markets will get over this phenomena. And on the whole, I think Bajaj Finance has delivered better than street expectations. And corrections like this can certainly be used as good opportunities to get into a blue chip company like Bajaj Finance. But the real question in Nigel is that how much allocation you want to give to an NBFC stroke bank, because in what I'm seeing with a lot of investor portfolios, they're anyway overweight banks and NBFCs, and to buy some more of that, at these levels is something we need to be a bit cautious about.
Okay, so that's the take on Bajaj Finance. Deepan, hi, good morning. Yesterday we had this big move on Eicher Motors, 5%, right? In a market that was trending higher, no doubt about that. But what's your take? Do you expect this catch-up rally of sorts on Eicher to last? Would you be a participant, given earlier this year we were all talking about the heightened competition in that space?
Yeah, good morning, Surbi. Yeah, that's right. I think competition is a reality for Eicher and they've accepted it. But they have their own plans in terms of exciting new range of models which is coming through. And I think they're going to unveil their electric vehicle strategy as well. But there are two disappointing aspects of Eicher Motors which I'd like to caution over here. One is that the actual volume in the domestic market, I think, is below our expectation at least. And we would have thought that given the effort put into distribution and into brand building, they would be able to sell more motorcycles, but that's not been the case. And the bigger disappointment is on the export side. When you look at the numbers month after month, exports are not growing the way they should be. And that's a huge opportunity for Eicher, but somehow it's not playing out. And that's something we need to track quite closely, because at some point of time, domestic competition will start to eat into volumes and market share. But when it comes to exports, there's kind of a blue ocean, market for Eicher. But why is it not growing as much as it should? Earlier, they had capacity constraints, but that's no longer the case today. And they've invested a lot in these export business per se, but it's not given adequate, I would say, return from our opinion. So let's wait and watch. I would not like to buy Eicher at these prices. Although as a measure of disclosure, we and our clients are invested in them. So at present, we are just keeping a kind of a hold strategy for Eicher Motors.
The other space, Deepan, hi, morning, we saw a fair bit of activity. Before we get to more mid-caps, etc., is IT services. TechM, Infi, LTI, Mindtree, you had TCS, Wipro, everything doing well. Any thoughts on this pack from here?
Yeah, good morning, Prashant. Not surprised at all. I think whenever US markets does well, Nasdaq does well, these stocks come back into reckoning. And the general consensus seems to be a soft landing for the US economy. And maybe a quarter or two down the line, we will see tech spending improve significantly. And that should certainly benefit the Indian IT services. There's also this entire AI wave, which can trigger higher tech spends and a lot of transformation on the part of the Fortune 500 companies. A lot of them are clients of IT services companies in India. So there's an opportunity there as well. And from an investor's perspective, these stocks are trading at very attractive valuations. They've created a great deal of value. They distribute profits. We saw TCS, I think, doing a buyback, a way of distributing profits to its shareholders. So these companies have been the darlings of the Indian stock market. But it's just that there's some stagnancy in earnings because of global macro factors. But if that is changing, then you will see a lot of interest coming back into IT stocks. Also, a lot of investors are underweight IT. And something similar what we saw play out in pharma maybe 3 or 4 quarters ago could play out in IT if you see an uptick in their performance or some positive commentary coming through from the leaders over there.
All right, request you to stay with us, Deepan, for just a bit. We need to focus on one of those companies that came out with their set of numbers in the past week. That's KRBL. The numbers looked a little bit weakish. The export numbers as well did see a sharp dip. But what's the outlook going ahead? Well, we're joined by Mr. Ashish Jain, the CFO of KRBL, who joins us on the show. Good morning, Mr. Jain, and thanks so much for speaking to us here on CNBC-TV18. Season's greetings to you as well as your family and your entire team. Let's talk about the numbers, though. The first half of the year, it's been more or less flattish with a mild positive uptick. I think you've grown closer around 3% in the first half of the year. I recall earlier we were talking about double-digit revenue growth. Do you think double-digit revenue growth is still possible for this year? And also margin range should be in that vicinity of high teens?
Yes, and greetings to you as well. Yes, you are right. The first half has been flattish at around 3%. Now, let me just underline the drivers behind this performance. So if you look at our domestic business, that continues to do well. In fact, Q2 saw solid growth in the domestic business. I think the GST rationalization that happened late last year has come in as a shot in the arm for that business. The retail demand for consumer packs also continues to be strong. So we continue to be positive on the domestic business. The fact that rice prices are also at a year-on-year high is also helping the business in general. Now, on the export side, the performance has been a little lackluster. The key reason for that is a continuing reason, which is that our distribution in some of our key markets, especially Saudi, continues to be affected. Now, when a key market is affected, that obviously has an impact on the overall business. Now, in terms of the overall outlook for the year, we are hoping that the Saudi distribution gets normalized sometime during the year, and that kind of gets us back on the block from an export perspective.
Yes, so what is the number then, sir? What should we work with? You know, the hope is that things will get back and things normalize in Saudi. But what should we assume now? Should we realign our expectations from double-digit revenue growth to say mid-single-digit or high single-digit?
Yeah, so I think medium to longer term, we continue with our sort of estimate that the company will continue to grow in double-digit growth, and margin will continue to be between 15 to 20%, more towards 20 than towards 15. So that's the outlook that I can frame for you right now from a medium-term perspective.
Okay, but nothing for FY24, right, Mr. Jain?
Yeah, we generally we generally don't give short-term guidance.
Can you talk to us a little bit about the harvest season, which is now, right? October to December. How is that panning out? I mean, because that will have an influence on FY25 numbers as well. How is that looking? Yeah.
Yeah, two key observations there. One is that the basmati harvest this year is strong. As per our initial estimates, I think the overall basmati production would be higher by 10% overall as compared to the previous year. So that bodes well for the industry. However, at the same time, the demand continues to be strong. So after the initial hiccups around the minimum export price, etc., the millers are back in the market. There are purchases being made, and we continue to see strong demand both from domestic as well as international players. And because of this, even after a strong harvest, the prices continue to trend high. So our estimate is that the strong demand is good for the industry. So I think that bodes well for the industry. And we are doing a regular buying now because this is an important aspect for us. We spread our buying over the whole season, and we'll continue to do it.
Mr. Jain, give us some more details on what's happening with exports, because it's a massive drop, 60%. You said distribution issues in Saudi. Can you elaborate on that? And what's happening with other markets? Because I don't think your competitors are seeing this level of a drop in their exports. So what's going on?
Sure. Yeah, so first, just to explain the year-on-year drop number that you see the same quarter last year, which is Q2 of FY23, including bulk exports to China. Now, this was bulk export of non-basmati rice, which, as you are aware, because of government regulations, is no longer possible in the shape and form that it existed then. So, therefore, that is one reason that business is no longer available now. The other aspect is, like I mentioned, which is that with respect to a branded business, the distribution continues to be a challenge, but we are hopeful of solving it soon. So those are the two things behind the...
Yeah, I actually wanted to understand that, because the ban on certain varieties of rice, beneath a certain price threshold, I think that's still continuing. So when you talk exports for yourself, out of the whole, if let's say 100 is that whole, how much is basmati? I'm guessing the bulk of it is basmati. And how much was the non-basmati, which has now been curbed completely till regulations change again?
Yeah, so, basmati is the predominant part of our business from an export perspective. However, we do a bulk export of non-basmati opportunistically whenever we are able to get strong margins. I mean, if you look at, let's look at FY23 as a whole, the bulk of that revenue was from basmati from an export perspective.
Okay. And by when does this improve in Saudi, and what about other markets? Can, till issues are sorted out in Saudi Arabia, can other export markets make up for basmati? I mean, some idea about which month will this be rectified by? We're in November now.
Yeah, so sure. No, so definitely. See, we continue to work on other markets, and they're also shaping up well. For example, We've had some distribution improvements in other key markets of Middle East like Kuwait, etc., and that is shaping up well. Similarly, Australia as well as North America are shaping up well for us. So, it was our strategy to diversify export revenue as much as possible, even before all these Saudi issues, and we continue to work on that, and they are shaping up well. Now, in terms of a specific timeline, it's difficult for me to comment on that right now.
What about Saudi as a percentage of the total, of your total sales? How much is it? Because exports, I think, are 40%. How much does Saudi account for it?
Yeah, so see, if you look at India as a whole, Nigel, Middle East accounts for about 80 to 85% of total basmati export from India, and within that, Saudi is the largest market.
Largest would be, you want to put a number to it? 50%, 60%, more than that?
Won't be possible.
Yeah. All right, no worries. Just a final question, Mr. Jain. In the past, we have spoken about this, I think 2025, 26, that 7,500 to 8,000 crores of revenues. This year is going to be a little flattish. So do you think the target is still on, or do you think that you'll have to achieve it May now? And yeah, go ahead.
Yeah, so like I said, we see the whole Saudi stroke export situation as a temporary situation. Our brand continues to be very, very strong in the international markets. So as soon as these short-term issues are sorted, I think we are hopeful of getting back. Saudi itself, we see as a 700 to 800 crore opportunity once the distribution stabilizes. So, if you see the domestic market, that's doing well, along with once the export situation is normalized, I don't think the target is something very far-fetched.
All right, we'll leave it there. Thank you very much. Appreciate you joining in, sir. And thanks for explaining what happened in the quarter and how things are looking. So, maintaining medium-term growth targets, etc., but nothing very specific for FY24 from KRBL. Well, Deepan Mehta is still with us. Deepan, you heard that conversation. If you want to weigh in there quickly, if you have a view on KRBL, go on.
Not really. I think this company has been around for a long, long time, and in our opinion, hasn't performed to its true potential. I think rice and rice exports and branding, on the face of it, appear to have a huge opportunity. But there's a lot of volatility in their earnings, which is why the price-to-earning ratio also is pretty low for a company of this size and this nature of business. So from our perspective, it is an avoid.
We've, by the way, Deepan, just wanted to ask you, have you checked out this new listing, the NSDL, it's not the depository, but it's called Protean, which basically does a lot of back-end work for all of the Aadhaar and other digital public infrastructure, which got listed 2 days back. It was up 20% yesterday. Have you given it a look?
No, not really. I'm generally avoiding all these new listings because there's so much of volatility, and price discovery usually takes place 2-3 quarters down the line. When things have settled down and we have seen 1 or 2 quarters or so, then we're able to judge the potential of the business. So from our perspective, that also is the company which is avoidable. Although I did feel that in terms of track record of financials, has not been as great as the valuations are reflected in the market. So it appears to be a bit overpriced, but this is not a high conviction call.
Okay, fair enough. Stay on, Deepan. We'll have more questions for you. We do have to take a break. Before that, we'll come back and, of course, tell you, everything else is that's lining up. Coming up, of course, is Anuj with his call on today's trading setup. After that, we will bring you top stock picks from our technical experts as well as our F&O expert. And before the market opens in the CNBC-TV18 Stocks Board, we will highlight the top stocks in news to focus on today.
Okay, welcome back. We got, 15 minutes to go for the market pre-open, and Anuj is here with us to tell us what he's making of the trade setup. Anuj, hi, morning.
Morning, Prashant. Yes, significant new highs now for the index, right? The Nifty is just 2.7% away from all-time high. And despite all the consensus being that mid-caps and small-caps are risky, they're still outperforming. The mid-cap index is just 0.7% away from all-time high. And the small-cap index has been making new highs ever since Diwali day. And in fact, yesterday also hit a fresh all-time high. And this market has rewarded you handsomely for being positionally long in this market and trailing your stop losses. Now, one issue is that the earnings season is over, so it will be tough to sort of find cues from here on. The focus will be on the RBI policy and the state election outcome, which both coincide in the first fortnight of December. Global cues are good, of course. Dollar, Brent, bond yields all behaving themselves, so that's looking quite good. On the Nifty, there's weekly expiry today. The big move may have already played out yesterday, and today could actually belong to option writers. And that zone is 19,585 to 19,732. And my base case is that the Nifty perhaps stays for better part of the day in this zone. And only if this zone is taken out, then you get a big trade. On the Bank Nifty, first resistance is 44,408, yesterday's high, and the bigger resistance is 44,500 based on the call option zone. On the downside, the support comes in first at 44,165, yesterday's low, and then 44,000, where you have the highest put open interest build-up.
Okay, all right, Anuj, thanks a lot for that. Well, let's get in Mitesh as well as Sudarshan as well, who are joining in to help us out with their call for the day. Good morning, gentlemen. Thanks so much for joining in. Well, yesterday was a little bit more tricky because we're starting gap up, but the good news was we ended higher from where we started off. But how do you approach trade today? Mitesh, you go first.
Morning, Nigel. So I think yesterday, after the gap up, we got an intraday dip of about 50-60 points, and then I think, picked up from there. That low becomes an important pivot on the hourly chart. So for me, I think this is a market in which if I want to take a fresh position, I would want to see some intraday dip and take yesterday's low as the stop loss. And on the upside, now I'm targeting the range of about 19,830 to about 19,850. So that's the profit booking target for me.
Okay, got it. Sudarshan, good morning. What about you?
Good morning. Well, I've been consistently saying stay long in the market. Yesterday, because of the gap up, I said buy a dip. We did get a dip. Now it depends on the trader exactly how he or she defines that dip. So it's not easy to say that everyone bought that dip. But the trade is still to be on the long side. Now what's happening is that the Nifty is entering a resistance area of about 19,700 to 850, 900. We'll find out what the zones are exactly, but it's entering that zone. So here, there is no need to rush into any kind of buying. You wait patiently for significant corrections of 100 points to come, and they will come, and then you enter long. But the trade still is to be long.
Okay, got that. So remain long. That's the advice. Gentlemen, good morning. Let's get down to stocks as well. Mitesh, what would you go to? What are your opening trades today?
Morning, Surbi. All buy call list again. I have a buy on Info Edge or Naukri, which has been a recommendation earlier. Now, if somebody wants to buy a fresh, keep a stop at 46.95. Look for a target of around 48.50 on the upside. A buy on HDFC Life Insurance. Keep a stop at 627. Look for targets of 655. I've also been advocating a lot of refining stocks, and IOC comes on the buy list again. Keep a stop below 100. Look for a trading target of 106. And Asian Paints is the final buy call. Buy here with a stop at 30.95 for a target of around 31.80.
Gentlemen, morning. Sudarshan, what about you? What are your calls?
Well, Prashant, Reliance is a buying opportunity. It's now giving us a reasonable bullish pattern, which is actually a positional buy. Now, I've already explained that for the short term, markets can be a little choppy entering into a trading range. But if you are looking for a positional trade, and you should be, because the real money is made in positional trades, not in day trading, consider buying Reliance, stop under 23.25. Tata Chemicals is my only intraday short. The stock has been falling every day consistently, not sure what's happening. It's an intraday short with a stop of 960. Siemens is also a buy. Siemens has a similar pattern as similar to Reliance, big decline, which is a correction, and now a base and a breakout from that base. Again, it's a positional trade. Don't run after intraday trades. You may not get much. It's a buy with a stop under 34.35. And finally, SRF is a buy. It had a correction similar to the other stocks. Then it started a rally. It's into a trading zone. That zone should break on the upside. Consider buying with a stop under 22.80. This one is a short-term trade.
Okay, let's just talk about, got that, Sudarshan. Let's talk about a few large momentum movers, right? Because a point completely taken that if you positional in a market like this will make you money intraday, to get in, get out quickly is difficult. But just a few names, Mitesh, coming your way. If you can have these intradays up, Angel One had a very strong volume-led move yesterday. It's done phenomenally well. Manappuram is another one which went up 7-8%. Very strong volumes once again. Volume-led gainers, all of them. You had Phoenix Limited, which went up 6-7% in trade. There was something like a Ahluwalia Contractors, which was up over 10% in trade yesterday. Bikaji. I mean, actually, yesterday was such a rich market with these volume-led mid-caps, which really were flying all over the place. Mitesh, you want to pick out from any of what I've mentioned or anything else here?
So I'll pick two of them, Prashant. Manappuram is something, which after the good news flow opened with a good gap. And, the last swing high for the stock, which was made in August, was around 154.5, which was the closing, and we got a high of 154.35. The structure is very positive. I think once it gets past this 154, 155 mark, expect the stock to extend its rally to about levels of 170, 175. Angel One is something, which I would suggest, I would avoid purely because of the fact that one, it's met all my targets, it's exceeded them and still continues to go higher. So difficult to figure out where it will stop. But people can just use a trailing stop loss of a 10-day average. But the other one which I have a comment upon is Bikaji. It made a good bullish rounding formation, broke out above that once it managed to get past levels of 530. And this stock is still in momentum zone. So I'm expecting a target of around 620, 625 as a minimum, but with a good chance of stock heading towards 670 plus. So very positive. Fresh positions can be taken with a stop below 525. And, if you get a mild decline of, let's say, 4 or 5 points today, I would want to add on to my long positions.
Okay, got that. Sudarshan, just quickly, since you're talking about positional trades, I wonder if you're seeing anything interesting on the two big pillars, whether IT stocks or banks, because yesterday both were participating and a lot of the frontline IT names had a good run. Do you see anything interesting worth a positional trade on either of these two, any big bank or any big IT stock?
Yes, the banks are much more interesting than IT. State Bank and ICICI Bank are both positional buying opportunities.
Okay, all right, got that, gentlemen. So thank you very much for all of these calls. We'll come back to you closer to market opening. Let's also get some F&O trades going then. We've got Chandan Taparia joining in from Motilal Oswal for exactly that. Chandan, good morning. What stocks are you looking at today?
Good morning. Thanks for having me. So first, looking at Nifty, the index has started to form higher highs, higher lows on the weekly and the daily scales, and supports are gradually shifting higher. And now we believe till it holds about 19,442. This rally can extend towards 19,850 to 20,000 marks. Put call ratio is rising. India VIX is consolidating and falling down. And all the data setup and internals are working well, which indicates that this momentum could extend. Talking about Bank Nifty, we believe with support of 44,000, this rally can extend towards 44,444, 44,750 zone. Looking at the stock, we have positive on the Nifty Auto Index, and most of the auto stocks are doing well, whether we talk about TVS Motor, Bajaj Auto, or even Auto Ancillaries name. So positively on the TVS Motor, we are recommending as a preferred pick. The stock has seen a strong run-up in the last couple of months. Weekly, daily, monthly charts are showing strength. We have seen built-up of long positions, so recommending to buy on TVS Motor with support of 1635, and here we have a target towards 1735 levels. Second trade, that is buy on Apollo Tyre. We have seen a fresh price pattern, and stock is all set to hit the fresh lifetime high territory. We have seen a spurt and the short covering can trigger, so one can buy with support of 420 for an upside move towards 450 level. Last trading area, that is buy on Concor Container Corporation. The stock has formed pole and flag patterns and trading at 11 months high levels. So a bullish patterns with momentum and volume surge indicate 5 to 7% rally cannot be ruled out. So one can buy Concor with support of 740. And here we are expecting a momentum towards 780 levels.
Okay, got that. Chandan, thank you very much for the details over there. We'll take a quick break on that note. Come back on the other side. We'll have the pre-opening trades. And we'll also discuss power. Harshvardhan Dole will join in on a take on, of course, a lot of the buzz around more thermal capacity addition and whether that's good news for stocks. We'll be back with that in a bit. Welcome back. So as we've been pointing out, the day is, starting off with a bit of a red, profit taking across the neighborhood today, anywhere between 0.5% to 1.5%, depending on which market you are picking up. And the GIFT Nifty has been indicating that we'll probably start off on a bit of a cautious note. Compared to other markets, there's some green over here. As I said, Asia is actually on a downbeat note. We still have Deepan with us. So Deepan, let's talk about what else you could be looking at, considering the market has taken out several important levels at least yesterday, and the going seems to be good. FIs have turned buyers. Fresh buy ideas. What comes to mind?
Oh,
tough one, huh?
As the earnings season starts to conclude, what we find is that the pharma companies have come out with an exceptional set of numbers. And there's this company, Capital Point. I heard their interview also on your TV channel. It's one of the outstanding performers in the pharma space and a very unique business model, or rather I would say unique market opportunity in Latin America, where they are leaders because they have built the brand and the distribution. So I think this company has got great prospects. Also, their nascent US business also scaling up pretty well in terms of the products that they are targeting, the oncology products. And it's a company which has excellent, I would say, capital allocation strategy as well. So very positive on this company. But again, a disclosure that we and our clients are invested in it. And even at these levels, we feel that there's good potential in the stock.
Okay, there is good potential in the stock. Deepan, any thoughts on rate gain? There is, of course, the QIP as well. But any thoughts? It's done well.
Prashant, you really have said it's a stock I regret missing out on. And I was tracking it since its listing, but for some reason or the other, never got into that company. But it's a great stock and a great story, especially when you are so bullish on travel and hospitality, and there are so few stocks to buy also within that space. I think RateGain certainly is a very unique company. And I don't know why they're doing a QIP, I think, but anyway, that's, promoters do take advantage of market conditions. But by and large, I think it's a solid performer. Only issue, of course, is its valuation. It is very richly valued. But the performance, the quarterly numbers have been exceptionally good. And the potential is immense because, they can keep on growing globally, not just in India. So it's a company worth monitoring and worth tracking. It's right on top in terms of our market watch. And at appropriate time, we look at, buying into this stock. But for the time being, I think it's best just wait and watch. Because I think there's not enough margin of safety if you buy at these levels.
Okay, all right. Deepan, I wanted to ask you about Religare. Yesterday the stock got pummeled actually. It was down close to around 5%. I think the street is a little bit nervous whether or not that open offer goes through. Though we had Mr. Burman who spoke to Prashant and he said that he's confident that they'll get the CCI approval. Now, if the approval comes through, actually, there's a bit of an arbitrage opportunity because the open offer is at 235. The stock ended at 211 yesterday. What's your view on the stock, on Religare? And how do you see this playing out with regard to the open offer?
See, Nigel, I don't think investors should try and take such arbitrage opportunities. There is so much happening in the market and there are so many sectors and investment themes which are playing out so well, then why go for such arbitrage opportunities? It is just, capital getting blocked over there. Religare as a stock, have been tracking it closely, but generally troubled companies is what you need to avoid in the NBFC and the financial services space. There's so much of choice available at attractive valuations with fair degree of certainty and earning visibility. So I'd rather focus over there than a turnaround story like Religare. And especially when there are so many controversies from an investor's perspective, it's best to avoid it.
Okay. That's a word on Religare. Lots going on. Deepan, we'll actually get into a chat with a power sector analyst in a bit, but I wanted your thoughts on it because, again, in terms of news announcements, I think there's a lot happening. The whole shift to renewables and there's talk of adding more thermal power capacity as well. But the question is, stocks have run up and whether there is still enough left on the table. What do you think on that? And if you were to look at buying something in power, what would it be? Generation, transmission, distribution? What part of it?
See, within the power space, again, another company, not a recommendation, investors should do their own due diligence. We like APAR Industries. I mean, look at the way the numbers have come through for last several quarters or so. And it's not just a play on domestic power sector, but global as well. And what is happening in India is happening globally as well. I think more and more renewable energy requires more and more distribution that requires more conductors and transformers. And transformers require oil, so that's and cables as well. That's where APAR Industry is playing, and it's a solid player in terms of global standard, and still available at attractive valuations. But there could be volatility in earnings because it is raw material intensive business. That's one company we like. But on the whole, within the power sector, I think we prefer to play on the transmission distribution side. Transformer companies, like a small company like Voltamp, if you see, came out with very impressive set of numbers. And again, they're a quality player, focuses more on the private sector than the public sector. So to that extent, their receivables are well under control and steadily increasing market share. And in some of the products which they have a dominant position as well. So I like to look for stories in the T&D sector. And that's where I think there could be value, because power generation, the utility companies don't make sense to me because of low return on capital employed. And the equipment companies, I think, also because of the kind of order inflow and the volatility in earnings, they're best to avoid. So T&D is the space to be in as far as power is concerned.
Okay, all right. Thanks a lot for that, Deepan. Well, let's get in Abhishek here. He's joining to tell us about a stock that he's tracking, which features on a Momentumizer segment today. Abhishek.
We have, Bajaj Finance on our radar with respect to Momentumizer. The stock has actually underperformed both Nifty as well as, Bank Nifty. So on a weekly basis, Bajaj Finance is down 3.5%, while Nifty has gained by 1.2%. While on a monthly basis, Bajaj Finance is down 10.3%, while Nifty is down about 0.3%. Take a look at the volume data. Yesterday's volume was the highest since 6th of October 2023. That is about in last 40-45 days. Yesterday's volume was the highest, coming in at 1,406 crores. On 6th of Jan, it was close to 1,730 crores. Wednesday's delivery volume was about 53.98%. Take a look at the stock price now. The stock is at 7,224 rupees per share. And if you take a look at the key technical levels, it is trading below 100 DMA and above 200 DMA. We have news on the stock as well. RBI has taken action against Bajaj Finance, and they have asked the lender to stop sanctioning and disbursing of loans under e-com as well as Insta EMI cards. Back to you.
Okay, and by the way, I just want to point out that 10% drop that you're seeing on Bajaj Finance, these are first pre-opening rates coming in. Let's see where it settles, but 9-10% lower. That's Bajaj Finance, and Finserv is down about 2.5% as well. For the rest of the market, it's about a 30-point drop at the open. That's what the pre-open is indicating. We've got stocks like Reliance, Lever, that could be starting off on the negative side. But these are early rates coming through, so let's wait for them to settle. Abhishek, tell us more about what brokers are saying on this RBI move with respect to Bajaj Finance.
First up, we have Macquarie's note on Bajaj Finance. They say that by RBI order, they like to monitor disbursements and AUM growth closely. So in terms of, from the note, what I could take out is that Bajaj Finance added about 3.6 million customers in Q2 and about 0.68 million customers in terms of EMI cards were acquired digitally. Now, this forms about 19% of total customers acquired in Q2 FY24. Now, EMI card, as per the franchise itself, stood at about 41.9 million, while digitally sourced EMI cards franchise stood at 4.2 million. This forms around 10% of the outstanding EMI base. So they think that the numbers look high, and for this reason, they are surprised by management's comment with respect to minimal operational impact. How long will RBI keep the ban in place? In certain cases, historically, RBI has kept the ban for 12 to 18 months, to be fully revoked by RBI. Since the press release this already states that Bajaj Finance has started issuing KFS key financial statement. That is, we think that the ban could be revoked in less than 12 months. Citi has written on Bajaj Finance as well. They say that in H1 FY24, 13.4 million Insta EMI cards were acquired digitally, which is a monthly issuance of close to 220,000. So B2B loans from digital EMI cards would have been around 3.8% to 4.2%. Incrementally adversely impact could be seen on Bajaj Finance. Jefferies has also written a note. They say that while this is a negative and speed of correction will be key to restate the products, they see limited financial impact on Bajaj Finance. We also have Morgan Stanley on Bajaj Finance. They say that they do not expect the financial impact to be material. Prima facie, it appears that new digital EMI card acquisition is not affected. A key investor question is over there. So the stock could be under pressure in the near term, but the issue looks the one that can be resolved, thus mitigating the EPS impact that could be seen on Bajaj Finance numbers. Back to you.
Okay, thanks Abhishek so much for that. Very, very split views on the street as well, right? Some saying that you can't write this off, it is material. I think one of the brokers, the early one, said that it's 19% of customers acquired in Q2.
Yeah.
That's big. But others feel that
Jeffrey
this will
says
pass.
it's a very limited impact as well. And I think, the stock from, I think pre-open earlier, the rough rate was indicating 10% down. Now it's indicating a more sane rate, I think 4.5%. I wonder whether it'll be even less than that, given the kind of fall that we saw yesterday, 2.5%. So I don't know whether it'll even start 4.5% lower. So we have still 3 minutes to go. So let's see how that plays out. Well, power stocks, they're in focus. IIFL is positive on a whole host of power stocks, Torrent Power, Power Grid and NTPC. To decode what's fueling the rally in power stocks and what are the triggers going ahead? Well, we have Harshvardhan Dole, the Vice President Institutional Equities at IIFL, who joins us on the show. Hi, Harsh. Always good to see you in. Well, tell us, how did you find the last quarter? The Q2 numbers, the earnings, were they better than your expectations? And tell us that one top pick that you'll have from the power space.
Hi, thanks for having me. There are 3 or 4 takeaways that we, analyzed after looking at the second quarter number for power companies. First, the outlook on power demand that continues to be fairly benign, fairly strong, and looks like the cyclical recovery in demand will play out at least for next few quarters. Secondly, players are now acknowledging that seriously, we are running short of capacity. And there's going to be power deficit, or the rates have to go up if people want 24/7 power. Third, most importantly, people have started to beef up capacities which are other than renewables to build a portfolio which is lasting beyond FY27. And fourth, most importantly, the cash flow generation across the companies has been fairly strong because thanks to liquidity injection by the government through various schemes into the DISCOMs, the receivable position for almost all the companies is fairly healthy. So looks like, the fundamentals are now turning much more stronger than what we started off the year with. And looks like there are more legs to the power story than what we had anticipated, say, a year ago. So looks like the positive moment should continue.
Harshvardhan, just a word. I think the latest piece of news was the Power Minister's comments at a recent industry event where he said that, renewable, of course, is that medium-term objective. Sustainability is what India is looking at. But in the near term, we need to add more thermal power. I think he gave a number as well. I think 80 gigawatts, if my memory serves me right. So if indeed you see more thermal addition now coming on stream, which companies and which stocks benefit the quickest?
See, if you were to look at sheerly just the capacity addition announcements, then utilities will tend to benefit the least and the last when the projects commercialize. For example, when NTPC will announce a project, it will start to earn returns only when the project commercializes, which is maybe 4 to 5 years away. But till the time project is complete, the host of EPC companies or the food chain companies who will implement the project and the finances thereof will tend to benefit disproportionately. So there are 2 ways to play the whole theme. Either you play the annuity models like NTPC Power Grid, or you evaluate which food chain company you are most happy owning based on your risk reward and risk matrix screen. And, or maybe look at PFC and REC, who are the largest lenders to to the whole sector. There are multiple ways to play the theme. We choose to play the theme through utilities, where we think the risk reward is much more balanced and favorable.
Harshvardhan, hi, morning. So that's sort of absolutely clear, right? REC financiers, play the financiers because the utilities themselves who to build their stuff will benefit the last. So what's the size of the opportunity? So the 80 gigawatts is what the minister said. The exact statement was 80 gigawatts need to be under construction. And in that statement, he went on to say that it's mostly going to come from PSUs, not private companies. So, you know, there is already a fair bit which is under construction, right? I think some 30 gigawatts are under construction projects. So have you looked at what's the incremental out of this 80? How much new stuff, new needs to be created, which is the fresh creation opportunity that you're looking at, if you have numbers?
See, frankly, the way we analyze things, at least government is making noise that we need thermal here beyond FY27. Because other than the 2022 gigawatt capacity which is under construction, there is no new pipeline. And to that extent, it is quite heartening to see that government is willing to look at scenario which is beyond RE and beyond, you know, FY27. So to that extent, now one has to go back to the drawing board and say which of the states can actually, pay for this power for the next 25 years. And that sort of a permutation and combination will be underway. But in my opinion, in the bear case, the worst case scenario, India would still need to add at least 10 to 15,000 megawatt of thermal capacity each year if the GDP growth of, say, anywhere between 6 to 8% were to sustain. So the worst case is 10 gigawatt. In the bull case, maybe this could go to anywhere between 20 and 22 gigawatt of thermal capacity. And that's the need of the hour.
For how many years, Harshvardhan? 10 gigawatts a year.
This pipeline has to be created for the at least next 3 to 4 years for the energy security. That's our take.
Harshvardhan, I was looking at your list of stocks. You mentioned that you're preferring to play the opportunity through some of the power utilities. You have a buy on NTPC, you have a buy on Torrent as well, I believe. You have an ad on Torrent. You have a sell on Tata Power. So that was a little curious. Talk to us more about it, because we discussed this with the company in terms of, adding more capacity. And I think the statement that we got was they're continuing to focus more on renewables. And then, of course, Tata Power is a very complex stock as well. There's the coal trading business, et cetera, et cetera. So why a sell over there?
Well, if you analyze the whole opportunity, we are more comfortable owning annuity plays rather than unregulated plays, which the RE players tend to be. And it's not that, we think Tata Power is a structural sell. It's a sell based on valuation. So if the stock corrects maybe another 15-20%, it could be a good, portfolio allocation. But having said that, I think companies like NTPC and Torrent, these are stitching up their portfolios based on annuity cost plus model. And that is what makes us much more comfortable. While one may argue that Torrent is one of the most expensive stocks in the sector, however, if you take a 3 to 4 year view in terms of normalized power demand and their ability to compound their earnings at maybe 12 to 15% in base case and generate heaps of cash flow, and that to an ROCE which is impeccable, I think the stock is ridiculously cheap. It will continue to appear expensive and yet outperform the market by a wide margin. And that's the reason why it continues to be our preferred pick.
Okay. Harshvardhan, finally, power usually has been this sleepy, steady sector. It's only over the last couple of months that it's gotten really hot, right, and exciting. The market's mood is always mid-caps and small caps. So discuss some of the bigger companies. Talk to us about any interesting mid-cap opportunities if you see out there. Nigel was just reminding me about what happened in the smart metering rush, right? We all remember what happened to Genus Power and a couple of these other players. Anything else in mid-caps? I don't know, maybe the lubricant makers or maybe some of the other EPC contractors. Mid-cap or small-cap power stock to watch out for in the food chain, as you said?
I mean, forget food chain. While there are exciting plays in food chain, even within utilities, if you were to pick CESC, I think the payoffs are very asymmetrical. The stock has kind of, underperformed because of issues with respect to tariff revision in Kolkata. But in my opinion, if the power demand is going to outstrip the supply by a margin, the state has no option but to increase the tariffs. And were that scenario to play out over the next maybe 12 to 18 months, maybe post-elections or so, the stock offers an absolute asymmetric payoff, what NTPC offered at 80 rupees. Then there is very little downside, and the multiples can maybe, expand 80 to 100% hereof, because the gap between a CESE and a torrent is like, at all-time high. So while there are food chain plays, even CESE to me offers a very attractive payoff.
That's a powerful idea, isn't it? Thanks for reminding us, putting CESE back on the table. It's been a good chat, Harshvardhan. Thank you very much for joining in. You have a great day. That's making sense of the power space. Well, let's get set for the pre-open. It's absolutely quiet and flat. Nothing, not even 1 point down on the Nifty. Not one down, not one up. That's as quiet as it is. Bajaj Finance has settled with a cut of about 4% for the time being. Bajaj Finserv is down about 1.5%, and we'll start getting in rates right now. So, Nigel, guys, despite yesterday's 2.5% decline, this is a fresh negative.
Yes.
It might require a couple of months to settle things with the RBI. And it was a big part of their customer acquisition process. So I think the market will take its time to digest this, perhaps.
Well, I want to see what happens from beyond Bajaj Finance. Yesterday it was down 2%. Today it's down another 3.5%. So you're talking about 5.5% cut. Does it factor in this bad news? And will we see a rebound post, the lows that we get in the first few minutes? Let's see. Let's go straight to it. Well, the Nifty opens as flat as can be. Not moved too much. Very, very mildly lower. In fact, it's just fluctuating out there. The Nifty Bank as well as flat as can be. The good news, though, is that the mid-cap index opens well in the green. And in fact, that's opened with a gain of close to around 40 points. Bajaj Finance is already cutting its losses. It was down close to around 4% in pre-open. Now it's down close to around 2.5%. Maybe part of the news was factored in yesterday. Let's see whether or not there's going to be a fresh bout of selling on this one. Bajaj Finserv as well is down close to around 2%. Power Grid is pulled back close to around 2%. Hindalco yesterday was up 3%. That's pulled back close to around 1%. On the flip side, ONGC is up close to around 1%. And tech again is supporting. So TCS as well as Infosys, both of them are up close to around 1%. The Nifty, by the way, now is moved down close to around 30 points. As I said earlier, that 19,550 to 19,600, positioning as such that we hold on to those levels. But Surbhi, the more exciting space is definitely the mid and the small caps.
Oh, yes, absolutely. It's quiet, actually. Mid-cap index is seeing some green, but it's a marginal green. The advanced decline graph is very positive, however. You've got almost 1,900 stocks, 1,800 stocks advancing, less than 600 stocks declining. So the breadth of the market is looking very, very good. Talk about some of the early movers. Zomato is, running off to the races, 2% up straight away. Manappuram Finance is continuing the good work from yesterday, 2% up over there as well. What else do we have? Geo Financial Services having a good session, 1% up. We were just discussing the power financiers, right? Harshvardhan was saying that could be a great way of playing this whole capacity addition that's happening on the thermal side. PFC is up 1.5%. So those are the early movers. JK Tyre is having a good morning, about 2.5% up over there as well. On the flip side, watch out for rate gain, about 2% cut to 2.5% cut coming in as they're doing that QIP, raising about 600 crores. And then it starts getting a little quiet for the time being. Yes Bank, by the way, is cooling off a little bit. Union, UCO, Central Bank of India, IOB. So there's profit taking on the entire PSU lot. They were rallying big time yesterday as well. So watch out for some of the tier 2 banks, specifically the PSUs. That's where there is early profit taking that's visible. Nifty, ONGC, I think the comments from the conference call that Sonal highlighted, they're being well received by the market. Top performer on the index, ONGC is up about 1.5%. BPCL is up. Let's pull up the oil marketers because of this drop in oil prices. So BPCL is definitely up. We'll pull up IOC and HPCL as well. These are some of the green pockets, but overall starting a little cautious, I guess, along with, pretty much in sync with Asia, Prashant.
In sync with Asia. So monster Wednesday yesterday, and today it's starting at least a little subdued in that sense. So we're at about, 19,640 as things stand right now. Just a few names here, a few more names here rather, which are up and about. There's a company called Apollo Microsystems, which is up, which has done very well recently. It's up another 9%. We don't usually mention it, but look at the volumes. Volumes are supercharged. It's the second highest volume traded gainer across the index right now. The recent listing from yesterday, ASK Auto, that's up about 2%. It's got very large volumes as well, 315. What else? Sona Comstar is up about 1 3/4. So stocks at about, what, almost 600. JK Tyre is up about 2.5%. All got large volumes. MapMy India comes up with about 3% gains. Stocks at about 2186. It's the same vintage as, approximately the same vintage as RateGain in terms of its listed life. What else? Texmaco Rail is up about 2%, but then volumes start to thin out quite quickly. EMS Limited, by the way, we'll be speaking with a company a little later here on the program. That stock is up 5%. It went up sharply yesterday. And of course, it's come up very, very nicely in this month. It's up 50% in this month so far. So it kind of tells you where we are with that one. So, strong momentum stock, EMS Limited. Bajaj Finance is the top volume-led loser. It's down about 3.5%. Bajaj Finserv is down about 3% as well. So yeah, both those are coming under some pressure. And some of these moves from yesterday, like Angel One, it's retracing some of those gains, about 3% lower. CDSL saw a sharp move. It's down about 2%. There is Wellspun, which went up about 10% yesterday, is pulling back some 3%. Motilal Oswal was up 5-6% yesterday. That's pulling back 3%. And of course, we already mentioned RateGain, which is down about it's down 3% now. Again, but the stock's done phenomenally well over the last actually since its listing has done very well. So 19,635 on the index. We are down about 37, 38 odd points or so, which is, I think, absolutely fine given the scale of the move that we've seen recently, and of course, in particular yesterday. Our market master of the day is with us. Hiren Ved is Director and CIO at Alchemy Capital Management. He's with us here in our studios. Hiren, great to have you with us here.
Thank you.
Thank you very much for your time. Thanks for dropping by.
Thank you.
How are things looking, Hiren, as we've almost wrapped up the earnings season? We've got a bit of a push from global markets as well, with more and more conviction that maybe this big global 500 basis point global hiking cycle is behind now.
Yes.
Market seems to be getting behind that particular idea. What's your sense?
Yeah, so I think two highlights, right? From a macro perspective, it does look right now that we are past strong yields, right? I mean, unless something very untoward happens, even oil prices have corrected, which means that incremental inflation going forward should not be such a big worry. Back home domestic, I think Q2 earnings season was fantastic, right? So you've seen roughly about a 1% upgrade on Nifty earnings. So Nifty earnings are stable, and the broader markets have delivered almost a 40% plus PAT growth. So which means that all the margin-led compression, degrowth that we saw in 2022, the first 3 quarters of the financial year, now between this calendar year, Jan, and then the first 2 quarters of this financial year, you've pretty much recouped all of that, right? So from here onwards, I think it's really about which companies and sectors can deliver growth. So, we've kind of recouped what we lost. Top line growth was not great, but margin growth was very, very spectacular. It looks like, from what we hear, is that the festive season has gone pretty well. So third quarter earnings should also be reasonably decent, right? And I think we are not too expensive from a Nifty perspective, because if you're talking about 1150 earnings in FY25, we're at about 17 and a half times, which is not like exorbitant. You may see a little bit more consolidation, but I think we are certainly building a base for new highs, maybe at the end of the year or early next year. Very difficult to call in the short run. But the simple view is that if we have endured everything, the fastest rate hiking cycle, we've endured 2 wars, and despite that, if the markets are where they are, that tells you the inherent strength of the market, right?
Absolutely.
Well, Hiren, great to see you in the studio. Season's greetings to you. Hope you had a great festive season.
Thank you.
So since the going seems to be good, and you're saying there's inherent strength, the question is what to do from here on. I think that's what everyone's grappling with. You get a 1,000-point dip, everyone knows what to do. The thing is close to 20,000 levels. Now, how do you go about allocating fresh money? What's your advice?
So I think, look, there is no reason to be bearish on the markets, right? But we have to be mindful of the fact that sectors that have been doing well, a lot of the returns, we are already discounting FY24, in many cases FY25, right? So from here on, you need to really have a 3-year view if you want to invest in small and mid caps. Because obviously we've had a phenomenal rally from the bottom. There's obviously strong visibility, strong growth, but all of that is also reflected in the valuations. On the large cap side, obviously, markets haven't done that well. And just from a short to medium term perspective, I think that the risk reward is far more favorable on the large cap side, right? So, and I think still there are opportunities. Autos may continue to do well. The big banks haven't done much for a long period of time. So I think in general, from here onwards, if you're a small mid-cap investor, you need to have a 3-year view. But if you want a 1-year view, I think the large caps is where the value is.
Hi, Hiren. Good to have you in the studio yet again. Hiren, what do you make of some of these large financial institutions? Case in point, today we have some negative news on Bajaj Finance. Big value creator, mind you. It's recently underperformed. You have some negative news that comes in there. How do you position yourself out there? Banks haven't really performed, though earnings have looked quite good.
Yeah.
But on some of these NBFCs, some of these negative news actually provide entry opportunity. How do you place yourself there?
Yeah, so I think if you look at the situation between banks and NBFCs, right? I mean, what banks are likely to see is a continuous contraction in NIMs, right? And while year-on-year growth is pretty decent, quarter-on-quarter growth, is very hard to come by on that base. And we've seen the best of everything, the best of credit costs, the best of NIMs, the best of credit growth. So I think that's one reason why, despite good numbers, the big banks aren't moving, apart from technical reasons. There, I think, I agree with you that NBFCs incrementally may do much better. And if there are news flow like we have today in Bajaj Finance, that is probably a great opportunity to get in. Because as interest rates start to fall next year, you will see their NIMs actually expanding as opposed to contracting, right? So it's a good place to be in within financials. And I think the banks will have to navigate, and we will have to see how far the NIM compression goes. Having said that, I think, they're reasonable. So, I mean, if you have to allocate a lot of money, I don't think you have a choice but to buy the big banks. But if that's not a problem of yours, you won't lose out either if you don't own them.
Hiren, refresh our memories. What do you like in terms of specific stocks, and what are you getting behind in that sense?
So, Prashant, I think that as I've said before, I do believe that we need to go back to the cycle of 2003 to 2008-9, the kind of sectors that were leading at that time, real estate, manufacturing, capital goods, power, hotels. I mean, all of these sectors, to my mind, will continue to do well and lead the rally. And then to that you add EMS and defense, which are the new leaders in this bull market, right? So you need to have enough allocation to them. But as I mentioned recently, that they're not cheap, right? Because everybody knows that that's where the long-term visibility and momentum in earnings is. And they're also priced accordingly. So you need to have a really long-term view to bet there. I think the area which might be very interesting and which has not done well in the recent past is your, consumption at the lower end, right? That's been hurting very badly. We've seen that discretionary small ticket consumption has not done that well. I don't think that will continue to be the case forever. And there is no euphoria. Nobody wants to buy that because there's no earnings momentum. But if you have a good business, good management team, eventually demand will bounce back, if not today, next year, right? So there, I think the risk reward is far more favorable.
Give us a few ideas there.
I mean, like without going into names, right? I mean, let's say QSRs, the liquor companies, we've been very bullish on them. Even selectively, maybe FMCG at some point in time, because that's where the rural growth has hurt people, and those stocks haven't done that well. Obviously, valuations are a concern there.
Yeah.
But I think that whole consumption at the bottom end, low ticket, is where stocks haven't done that great. And I think that's where you could be one hunting ground. Secondly, if you're a real long-term investor, I think agrochemicals haven't done that great either, right? Because uneven monsoons, inventory issues and so on and so forth. But if you're a long-term investor and you want to buy, there are some great companies there as well. One could go look hunting there as well, right? So these are areas which nobody talks about right now, but this is where I think incremental risk reward is so favorable if you have a slightly longer term view.
Okay, so basically look for the underloved areas of the market, perhaps.
Yes.
That's one way of looking at it. But I'm going back to the loved areas for just a second, which is capital goods and manufacturing in this entire sort of universe, because you've seen the cycles. Talk us through the differences between the 2005 to 7 cycle and now. We were just discussing, for instance, a stock like Siemens yesterday.
Yeah.
And the sector analyst reminded us that it's trading at 55 times forward earnings. Now, so how does one comprehend these new valuation levels that are existing today? And how does one guard against excesses, which are bound to happen when you're in this bull market?
Look, I think the challenge in something like capital goods, looking at PE, is that they will always optically look very high, right? Because you have to believe that this cycle will continue for much longer. Higher for longer, what we use for interest rates, is what we need to believe.
For valuation multiples.
So I think the valuation multiples will keep correcting as earnings growth keep happening. Let's take a classic example of ABB, right? Now, obviously, it's not a cheap stock, but it continues to surprise quarter after quarter. Last 2 quarters, it has surprised, right? So as long as companies are able to rack up their order books and surprise on margins, which is typically what happens in the early stages of a good capital goods cycle, right? The stocks will continue to perform. And as I said, in all of these so-called loved sectors, as you call it, the love needs to be longer term. It can't be short term love, right?
Not a fling like.
You can't.
Okay, so higher for longer. I'm going to start using that phrase in a very different light now. So thank you for teaching us that, Hiren. Pleasure having you in the studios today. Thank you so much.
Thank you. Thank you so much. Pleasure.
Okay, let's just take one quick look on the screen before we move on. 33 down on the Nifty. That's what the picture is like. Mid-caps are, by the way, building up more steam and momentum. And that's where the positivity is this morning. Let's move on and get to some more corporate conversations, look at some more earnings as well. Metro Brands reported what looked like a bit of a mixed set of numbers for the second quarter. Revenue growth was up, but margins were contracting marginally. And sales were perhaps impacted by the delay in the festive season. Let's actually go through some of the numbers as well. Revenue was up about 17% year on year. Margins came down to 56.8%. PAT was down about 13%. So we've got the company's management now joining in. Nissan Joseph, Chief Executive Officer of Metro Brands, is with us. Mr. Joseph, thank you so much for joining in. Can you, talk us through the trends and why was there this compression on the operating profits as well as at the bottom line level?
Sure. I think what you're also looking at, first of all, thank you for having me here. You're looking at our consolidated numbers, which included some of the cleanup numbers that we needed to do from our recent acquisition of the Fila brand, right? But if you look at a standalone number, we had growth across the board. We did have a 17% growth in a consolidated basis. It was actually 15% on a standalone basis. And in that number, we did have the offset of the seasons like everybody's been talking about for Q2. And we've seen that as we've lapped that and come into the Q3 area, we've seen those numbers get more positive, right? So it is like we thought. So what we saw in Q2 was actually what I call demand and timing headwinds, but not economic headwinds, right? So the demand is obviously slow because of the timing caused by the shift in the seasons. But all the indications that we see today in the midst of the Diwali and the wedding season is that that was really a timing headwind and not an economic headwind. We still believe that the macro conditions for our business to the premium consumers still is solid.
Okay. All right. Good morning, sir. Thanks so much for joining in. Well, when we spoke last time around, you were telling us that you're expecting to grow in high teens. Margins approximately 35% odd on the operating front and PAT margins around 15%. Holding on to all these three numbers, or is there a possibility you want to upscale, say, the revenue growth?
I think we're very confident that our revenue will continue to grow in the high teens. Our EBITs will be north of 30%, and our PAT will continue to be, 15 to 17% range. And, I think there was a little bit of a scare for everybody in the industry as we went through Q2. I think we had predicted that number to be a little bit more muted because of the shift in the seasons. And don't forget, we're also going against a lot of pent-up demand for last year. So really, when I go back to the timing headwinds that I mentioned, it really has to do with two things. Of course, the festival shifting. But last year, this time, there was so much pent-up buying going on. And that pent-up buying, by the way, keeps declining a little bit, but it's not like it disappeared overnight. So it'll keep declining through this Q and Q4. And you can see that in our numbers. Q1, we were only up 11%. I know not many people would say that only, but we were up 11%. In Q2, we were up 17%. So you see our numbers starting to grow as we see last year's impact declining from the pent-up buying. And then you have the festival shifts that have also impacted Q2 that flows into Q3.
Mr. Joseph, hi, good morning. Prashant here. Investor I met recently, he said that shoe companies are a great ways to play this premiumization story because, they benefit, one, from premiumization because everything high-end is doing very well, not so much at the lower end. Second, of course, is that there seems to be a culture which seems to be taking hold of, and people are now shoe collectors, right? A lot of, I know here in office, many who are actually crazy about shoes, sneakers, and the like. We'll come back to some of those trends in a bit, but I just wanted to get some specific numbers for premium brands such as J. Fontini, Da Vinci, Crocs, Skechers. What has been growth like?
Yeah, so I think you've nailed it on the head. By the way, we love all your sneakerheads in your office. You tell them I said that. I think what we've seen in that category, if you look at our sales of shoes over 3,000 rupees, that has grown from 44% in Q1 up to 48% in Q2. And we're seeing a lot of demand for premium products, not only because, I think people are being shoe collectors necessarily, like you said, Prashant, but also because middle-class incomes are rising. Disposable income is rising. People see that there are good things that they can afford. I think one of the things COVID taught us was, we're not going to buy crap anymore, right? At COVID, we looked around the house and we said, we got too much crap. I'm never going to do this again. But I think what they're saying is, and it's not necessarily premium, but they're actually starting to see the value in these products, right? If you invest in a pair of shoes, not only do you feel good wearing it and look good wearing it, but it also lasts you an equivalent proportion of time longer. So we are seeing a lot of good moves on the premium side. At the same time, I think there's an overall sentiment that it is not as robust in the economy segment. Even in our walkway business, we're not seeing it as robust as we see it in our premium segment. But the premium segment is definitely going on with a lot of tailwinds to that.
I guess, Mr. Joseph, it's something that we're seeing across sectors, right? It's really premium where the growth is, and the economy or the value segment seems to be struggling, unless we're talking about one of the odd retailers. That's a separate story. But let me again try and get to some more numbers. If you could give us some sense of same-store sales growth in the quarter gone by and the outlook, and also average realizations. While you're saying premium is doing well at a blended level, how is that average realizations graph looking?
So that's quite a few questions there. Let me answer the questions on, same-store sales growth. When you go against Diwali and you don't have Diwali, there is no love, as the person said before. There's no love in that season. And, to have a same-store sales growth is almost impossible, if not at all possible, right? So that was definitely the case for us. We weren't immune to it. We weren't in any way an exception to it. Equally, when you lap that and you come into this quarter, Diwali was technically in this quarter last year. So it's not like, oh, you should have an absolute massive gain this quarter. No, it was still in this quarter. It just happened to be early in the quarter. It's slightly later in the quarter this year. But according to our trend projections, what we're seeing is that growth is on track as we expected. And it's not over yet. It needs to play out through the entire quarter before we're able to say, hey, that did exactly what we thought that it would do, or we thought it would exceed what we thought it would do, right? So just to give you an idea of that, when you talk about realizations, right, we are definitely seeing that the consumer has moved up. But, part of it is also inflationary, right? If we're going to have a 7%, anywhere from a 5 to 7% inflation running, just your normal shoes, even if you don't go premium, is going to see that kind of hike, right? And we also went through a little bit of a hike when there was that entire raw materials crisis that we had about a year ago. And that hike, while it stabilized, It's not that it's gone down to pre-hike levels, right? Nothing ever does. So we are seeing those effects play into it as well.
All right, I get that point. Spend a lot more if you have to on a good quality pair of shoes, and it lasts maybe a little bit longer as well. So take that on board. Could you tell us about the acquisition, though? Cravitex, the Fila brand, at the half-year mark, I think it's done roughly around 30 crores. And you had warned us the last time you joined as well that expect pain for a couple of more quarters on the operational front. But how do you see this ramping up? Say, by the end of this year, what do you end at in terms of revenues? And also, for FY25, does this turn around at the operational level and revenue outlook?
Yeah, so I think we're very clear about a couple of things. One is we're fully aware of the investments, and we call it an investment, not a loss, into that business. The investments we're making into that business, because like everything we do, we're not playing for next quarter. We're really playing for the next decade and the decade after that at Metro Brands, right? So that's number one. We see that continuing to be dilutive to our earnings going through the entire fiscal year this year, including Q3 and Q4, at about the same rate, both in terms of revenue, but also in terms of profitability, as we reflected in Q1, Q2, which is fine because we've baked that into our forecast that we have internally, right? So that's number one. Next year, we start to get to be where it's not dilutive to our overall performance, and that's our target for next year. At the same time, take that whole opportunity of time to position the brand to where we want it to go for the future. So FY25 is going to be more about repositioning the brand and normalizing it down to where it's not dilutive to us. And FY26 is where you will see the acceleration of that brand.
You want to give us some numbers? Revenue for this year, 24, 25, and then as you talk about the acceleration, it's going to be sprinting, I think so. So if you could give us a number out there.
Well, I think you can extrapolate the first half into the second half very safely, both in terms of revenue and in terms of profitability, like I said, right, for the Fila brand specifically. However, as I look through the following year, I would rather go through FY26. I think it's important to begin with the end in mind and then get to that journey, right? And when you look at that journey, we look at the peers in that group of Fila. The peers have, upwards of 300 plus stores in the country today, as we speak, not to mention that by the time we get to FY25, they would have added on more. And, I think we would be remiss not to look at those numbers and say, where do we see ourselves in that growth curve fitting against the existing market space, right? So.
Right. Mr. Nissan, just a quick more fundamental kind of question, and maybe this is not regarding shoe. Again, that premiumization. What do you think? What to your mind is going on? That the premium segment across cars, bikes, hotel rooms, your business, across the board, right? The lower end, everything is doing poorly. And the upper end, the premium end is doing... What is going on? What has changed? And the question for businesses and investors is how much longer will this go on? The same trend will go on. Because the pool of people who can afford these things is limited. It is growing, but it's not unlimited growth in that sense. Or has everyone become wealthy? It's a very fundamental question. I'm sure it's come up. You've discussed it. Briefly, if you can talk to us. Go on.
Yeah, I'm not sure how to read that, like you said, right? So the question becomes, are they going into the premium products, whether it's a biscuit or whether it's a Diet Coke drink or whatever they might be drinking? But you see, even the liquor space, things tend to have a cycle to them, right? We've seen liquor sales boom, premium liquor sales boom a year ago, and then it seems to have flattened off a little bit. We use the lipstick indicator. There's a lot of multiple indicators we do, but we cannot fathom why on earth that economy is not trickling down all the way down to the bottom, right? Now, having said that, though, if you look at it today, we're a pyramid in the terms of income distribution. The forecast is we become more of a diamond look, right? So it means there's going to be more people in the middle class. Is that causing some of the shift into it? We're not quite sure what it is, but there's definitely a distinct difference. But I wouldn't use the words I think you use. It's turbulent, in the lower segment. It's not turbulent. It's just not as robust as how we see it.
Okay. All right. Not robust, but hopefully will be robust. Thank you very much, Mr. Joseph. Appreciate you joining in. Great conversation as always. And thank you for joining us here on CNBC-TV18. Well, maybe just a change in behavior, right? From savers to spenders, and that's sort of showing up across the board. 1,260 on Metro Brands as we speak right now. We'll take a very quick commercial break right now, and we'll come back. We'll have Mo Manispas joining us, the Executive Director at HEG, Manish Gulati, with us on the other side.
Welcome back. This is Corporate Radar. As promised, we focus on the next management that we're getting for you. That's HEG. Remember, the numbers were rather weak, actually. The margins came in at multi-quarter lows. And the management, to be fair, had indicated at the end of Q1 that the next few quarters as well will be quite subdued. What's the outlook, though? Mr. Manish Gulati joins us to help us out to understand exactly that. Hi, Mr. Gulati. Good morning. Thanks so much for joining in. Hope you, your family had a good festive season. And hopefully things look up from a business perspective as well from here on. So let's talk about a couple of numbers. What was the capacity utilization levels in the past quarter? Do you expect it to improve from now on? And particularly since you have additional volumes coming in from the expanded capacity, what will volume growth look like for this year? That's FY24 in comparison to FY23.
Yeah. Good morning, Nigel. The Q2 was close to 85% and Q1 was close to 90%. But going forward, as I've always been telling you, that in the next few quarters are tough for the industry. And we expect the October to December quarter to be close to 75%. And likewise for Jan to March. So, I mean, 2, 3, max 4 quarters, we'll have pressure on prices. There's much lower demand, although there are not much inventories in the system. So the good point is that when the demand comes back, it'll be the upswing will be rather quick.
Okay, so pricing will be subdued for the next 3 quarters approximately. We got that. And, you're saying that there's lower inventory in the system. So let's get a couple of numbers. Normally, what are the inventory levels that are there in the system? And what is it currently, if you could tell us that? And also the volume growth number, you'll have additional capacities that are coming in there, though utilization levels on a blended basis could be lower. So will there be any volume growth in FY24 versus FY23?
No, I don't expect a volume growth. Rather, there'll be a slight dip in volume in this financial year compared to the last. And as regards the average inventory levels in the system, you see what happens is this product is produced only in very few countries in the world. So depending upon your location, I mean, if you're in a country where you do not have an electrode plant, generally the people would keep between 2 to 3 months, depends upon where they are sourcing it from, and where you have, let's say, a country like India where there are 2 players, two manufacturers of electrodes, generally they would keep a month or month and a half. So what I'm trying to say is that there was a time when people were hoarding electrodes and keeping a lot of inventories, 6 months, 8 months, even up to a year. So that is not the situation now. The supply chain is very lean. The steel manufacturers are not working with much inventory levels. So that is a good thing that when the demand picks up, production picks up, it'll quickly translate into demand. That's what I'm trying to say.
Right. And talking about countries which are important for the supply chain, China is one of them, right? And China has taken some action recently, Mr. Gulati. They've curbed the graphite exports, basically. Could you talk to us about what the implications could be for HEG? Does it give you a bit of a boost, at least in the near term?
See, as I've said earlier also on your channel, with China, we compete only in the UHP segment. So their exports keep going up, down, but their sector is only mostly, I would say, for the ladle furnace grade. So, I mean, depending upon their seasons, their winter seasons, they keep doing a lot of things. But yes, it is still a very big exporter of the non-UHP electrodes worldwide. As far as HEG is concerned, we are not exporting to China. We are not importing anything from China. It doesn't. So our concentration, our focus is on the rest of the world.
Okay. Mr. Gulati, I just want to come back to the earlier points that you made both on volume and on pricing, because you're indicating that both in the near term could be lower. So for the second half, can you give us a sense of what will be the dip in volumes, or if you could give us the absolute number as well? And again, pricing, you said pricing will remain under pressure for the next 3 quarters. How much pressure? I mean, can you give us some indication of the kind of decline that the market may see for the rest of FY24?
Like I said, for the H2, please consider 75% to be a good number, which was about close to 90% in the first quarter and 85%, close to 85% in the second quarter. So that is the explanation on the decline in volumes. Regarding pricing, I mean, it's coming sequentially, quarter on quarter, coming down 5%, 6%, that way. So that is, but when we talk about price, we don't see it in isolation. We look at compared to our prime
Raw
cost,
material.
which is needle coke. So needle coke prices are also coming down, but in our kind of product where there's a lead lag effect and 2 months of processing time, 2-3 months of inventory, it takes a while for the needle coke prices to show up. So we are generally concerned more with the spread rather than the absolute price.
Exactly. So that's exactly what I was coming to, that, you know, we've discussed the end product pricing, which is under pressure, but then now talk us through that spread. How will margins look like till this sluggishness continues in the second half?
I cannot put a number, honestly, but
range?
This quarter, range, no, I mean, no, I still can't put a number, but they'll be under pressure. Let me.
Mr. Gulati, you were fair enough to tell us the last time around that was the dream run when you saw 50 to 70% margins, a few years ago, and you said don't expect that honeymoon period yet again. But my worry is now we're not talking about 50 or 70, we're talking about 15 and 17. Will margins improve from the levels that we saw in Q2? Have they bottomed out, or will there be some more pain on the margin front, taking everything, volume, pricing, input costs?
Right. There is still going to be pressure in Q3 and Q4 on the margin in terms of percentage. And we're just waiting for that upturn to happen, and they'll go back up quickly because the trajectory is very clear.
But are we at a bottom on margins, sir? We get it that it's a sluggish market right now, but is 16%, is that the bottom? Or is it down, further down before that recovery comes in?
Pressure in Q2. Is second
half.
Yeah, second half. How much more?
It's not
the bottom.
Yeah.
It's not the bottom yet. Okay, got that.
It's not the bottom yet.
Okay, I think we are... Okay, all right. Probably down the line that low-end margins, but not right now. Thanks very much, Mr. Gulati, for joining us and running us through what you're making of the business environment. Now, let's move on. EMS reported a strong set of second quarter numbers, both on a year-on-year and sequential basis. Revenue jumped 54%, profit after tax nearly zoomed by some 70, but margins contracted on a year-on-year basis. Marginal, though. We have Ashish Tomar, founder and managing director at the company, joining in to take some questions. The stock's done phenomenally well. Ashish, good to have you with us here. Thank you very much. Could you talk to us about which projects reached revenue recognition stage? What really happened, and is momentum continuing into the third quarter as well?
Yeah, sure. Our projects are varying on different phases of completion. We've started a couple of projects in Rajasthan and in Uttarakhand, and because of that, our balance sheet has reflected the numbers as you can see.
No, those projects, the projects in Rajasthan and Uttarakhand have reached the revenue recognition stage, or, I mean, just trying to understand what caused...
Yeah. Sir, ours is a contractorship business. So we present monthly bills to the employer for the work done, and usually it takes around 2 to 3 months for the bills to get cleared and payment reaches us by that period.
Okay.
Okay. All right. Hi, good morning. Thanks so much for joining in, Ashish. Yeah, I recall when we spoke last, we couldn't get concrete numbers out, but your performance has been very good. Your growth has been very good. And at the halfway mark as well, you've done more than 300 crores of revenues. What do you end this year with? In the past, you've done around 25% growth on the top line itself. Can you outbeat that? And also give us a rough sense in terms of margins. It's been in late 20s so far.
Yeah, we hope to continue the growth at the current rate, and the margins would remain somewhere around these plus minus 1 or 2%, nothing substantial.
So 25% growth, are you being conservative? If I put in the numbers, 25% growth, you should end this year with at close to around 660 crores approximately.
Yeah, you can say that, but we will only know it by the end of the financial year.
Are you entering newer states, Ashish? You want to talk to us about that? Which new geographies, and how is that plan coming along? You've mentioned that in the past, that you would like to.
Yes, last year we got a job in Maharashtra. That was the first for us. And we have currently bid for projects in West Bengal, Jharkhand, and Madhya Pradesh. And we expect to secure some projects in the out of the tenders that we have bid for.
What's the size of this all this work? I mean, that you bid for?
Yeah. So, sir, we have bid for a HAM project in Jharkhand that's worth around 500 crores. And I think in Bihar it was a project worth 150 crores. And in West Bengal, we did bid for a project worth around 200 crores.
Could you tell us what is your updated order book? Okay, if you could tell us that. And what should your order inflow for this fiscal year be? How much have you already received? How much will you receive? Order book, how much you've received in terms of inflow? What do you end this year with?
Yeah, currently our unexecuted work stands at around 1800 odd crores. And till now, we have secured projects worth around 600 crores in this financial year. And we are hopeful of securing projects 500, 600 crores in that range by the end of this financial year.
Okay. Many of your projects are funded by the World Bank, Asian Development Bank as well. You've told us this in the past as well. So that's pretty good for you. But tell us, how do the payment terms work and how do interest rate movements affect you?
No, sir. Firstly, interest rates do not bother us because we do not have any debt on our book. And payments usually take a period of around 3 months because by the time we submit our bill, the bills are checked by various agencies such as the executing agency of the state, the project management consultancy, and then those bills move to the funding agency. And by the same route, the fund is released to us. So this takes a period of around 2 to 3 months.
Okay, Ashish, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18, and good luck. So you're in the right space, and the market, of course, is recognizing that. The stock, as we mentioned earlier, has done very well. Numbers look very good as well. Just a quick look at the market, which is now actually up 20 points from being down 35, 40 early on. There's been a bit of a turn which has happened. Take a look at the recent listing that we were discussing in the morning, Protean. I mean, up 20%. I think it's up another strong, it's having a strong day once again. The last I checked, some 8-10% or so. So that's really, and with volumes, by the way, 12%. So stock's almost at about $1,200 now. But Manappuram, again, something we mentioned in the morning, 6.5%. There is a bit of a breakout as well. GMDC is up about 6.5%. There is Welspun Corp, the pipe maker, which is up about 5%, 550 on Welspun Corp. RR Kabil, another pipe maker, 5%, almost 1690. That one. Solar Industries continues to power ahead. Boy, what a mover. 6850 on Solar Industries. Mapma India, some of these names, of course, we highlighted in the morning as well. So there is continuation, but there are new names into the mix as well, with just barely 45 minutes of trade behind us.
You mentioned Protean, Prashant. I was just recollecting our conversation with Mr. Sethi, who's the top executive at the company. We had him on trading hour before the issue, then after the listing as well. This company not only, does it manage the Aadhaar database. So every time someone's throwing up a query, a KYC query, where Aadhaar and tax verification needs to be done, it would probably be hitting Protean. They're one of the, I think there are only 2 in the market, 2 or 3, and they're one of the biggest such service providers for digital infrastructure. Not just that, they're very big on ONDC. So the entire back end of that e-commerce platform, open architecture, it's being done by Protean. And they're looking at diversifying into more such sort of big public digital infrastructure projects to enhance their revenue profile. So I remember the listing started off a little quiet, but since then I think more and more momentum is coming up. It's owned by NSE in part, and I think a couple of other public financial institutions as well.
In pre-open, when we were saying that Bajaj Finance was down 10%, then as we were getting closer, it was down close to around 4%, and it started off with a cutoff around 4%. The positioning is such that the stock has seen a big recovery from the low point of the day. Yesterday, the stock ended 2.5% lower. The street was positioned for that. And now it's up close to 3.5% from the day's low. And that's the point that we've made. How much of this bad news was already in the price if you clubbed yesterday's fall and today's 2.5% cut at the start itself? So it seems for the time being that bad news has been lapped into, and that's why that stock has moved up as well. Mitesh is back with us to fill us in with how he's reading the first half-hour out of trade. Hi, Mitesh. You need to buy the dip. You got a 25 point dip, I think so, earlier. You bought into that, you'll be happy. I think it was more than 25 points, actually. I think it was a 45 point downtick. What's your take? We're closer to around 19,700. Appears this market has got legs, so the Nifty Bank has not yet performed.
Morning again, Nigel. The Nifty Bank, I think, should come back into the green as well. I think both the indices are positively biased, but the fact is that the Nifty Bank has been underperforming the Nifty for about a month and a half now, and that continues. So it might be a bit of laggard, barring a day when it comes back and tries to catch up the underperformance. But otherwise, I would, if I was index trader, I would still keep my focus on the Nifty, and I'll maintain targets of 19,850 or thereabouts, where I would want to take profits. Having said that, on the stock side, I have a buy on TCS. Keep a stop below today's low of 34.10 and look for a target of around 3,500 to begin with. I do suspect we'll eventually go higher from there. And the other stock which I like is Balkrishna Industries, making a fresh high today. That's a buy with a stop at 26.20 for targets of 27.45.
Okay, all right. Mitesh, thanks very much for that. We'll take a quick commercial break here, but there's more coming up on the other side. We put the focus on commodities. Manisha will be with us with what's happening there, what's top of mind. That's coming up in just a bit.
Welcome back. So the market has turned around. It's tried to adopt the color green instead of red now. Interesting move from the lows of the morning already. So let's see what's happening with the commodities now. Manisha is with us in the studios. Manisha, good morning. Tell us, what are you tracking?
Well, I'm looking at the rubber prices, and they have continued to do well for the last couple of months. And we've started November on a positive note as well. At this point in time, we are trading at a one-month highs when it comes to the rubber prices. And it's not confined to a geography. We are looking at stronger rubber prices in the Indian markets, in US, in China, Japan, and the European Union as well. Well, that is because the data from China has been on the positive side. Remember, 45% of the global natural rubber consumption comes in from China, and the sentiment there seems to be improving. So whether it has been about the China industrial output or the retail sales numbers, both came in on the positive side. And then China also has reported record EV automotive sales in the month of October, and that does mean rubber consumption from the automobile industry in various forms that has been supportive. While the demand is stronger, the production clearly is not. Thailand, which produces nearly 30% of the global natural rubber, is looking at production down by 8 to 10% in 2023. Not just Thailand, the Malaysian production, if you look at on this month on an year-on-year basis, has seen a decline by nearly 15%. For the Indian rubber as an industry, for the production here, while initially there were concerns that we could be looking at lower production because Kerala was looking at a drought there, but now Indian natural rubber production is expected 5% on the higher side for the year 2023-24. India, remember, imported nearly 5 lakh tons of rubber in the previous year as well. So there is a mismatch in sense of demand supply, which the street is anticipating for this season as well. And you could be looking at higher imports continuing into the country. In the meanwhile, if you look at the data from the last year, the Indian consumption hit a record high at around 13.5 lakh tons. So the expectation is that with the demand improving, you could be looking at this number also being surpassed in 2023-24. There also is a global production and consumption data that we have, which anticipates that while the production will increase just about 2.5%, the consumption is expected to run up by 14.6%, clearly telling you that the kind of gains that we have seen in the raw material rubber are here to stay.
Okay, thanks very much. So Rubber in Focus, Manisha, thank you for joining us with that. Let's shine the spotlight on a few names now. ONGC, something we highlighted in the morning. I think stock's up. Sonal is here with details. Sonal.
Thank you for that. Well, ONGC is in focus on the back of their conference call takeaways after the results that the company reported. Though the results were below estimates, their commentary on volumes has been positive. The company says they expect commencement of oil and gas production from KG Basin in coming months itself. The oil production should start in November itself, and gas production in the next year in the months of April and May. And this is the next leg of trigger for the stock as well, because volume growth has been subdued. They say this will increase oil production from 10,000 barrels to 45,000 barrels. And the gas production will be to the tune of 10 MMSCMD. This is in FY25. Additionally, ONGC is also exploring investment or capex to the tune of 1 lakh crore rupees. This is in 2 petchem projects. This will be done in the form of a joint venture, but by FY28, FY29 as well. However, they are still considering it, and this has not been finalized. New gas fields, according to the recent formula, it will attract 20% premium to gas sales, and they say that around 6 to 8% volumes every year will come in from new gas sales, and this is something which will add premium to their pricing as well. Motilal Oswal has reiterated a buy rating on the stock with an 18% potential upside. They have a target price of 235. Morgan Stanley has an overweight rating with a target price of 216. They say production growth after a decade of decline is something that would be the next trigger for the company. And management in the call highlighted that now it's largely de-risked, and going forward there could be positive volume growth coming in for the company.
Okay, ONGC reacting quite well to those comments. Thank you, Sonal, for all of the details. That's one stock on the radar. By the way, the oil marketing companies are doing very well today, with oil falling to about 80, IOC, BPCL, HPCL, all those stocks as well. On the downstream side, they are up between 2 and 4%. Let's look at some more stocks that are making it to the headlines today. United Spirits in focus on the back of the ongoing negotiations with the UK on the free trade agreement. Vivek has more on this. Vivek?
Well, absolutely right. So there has been quite a bit of hope built up as far as United Spirits is concerned on the back of, the ongoing free trade agreement negotiations that are happening between India as well as UK. In fact, even the management told CNBC-TV18 earlier that in case there is a reduction in duty as far as, Scotch is concerned, there could be a reduction in, the MRP of the spirits bottles by close to 10 to 15%, which would indicate much larger volumes for a lot of these players. But what's actually happened is that yesterday sources have told Network 18 that the India-UK trade negotiations are taking longer due to the tough negotiations that are going on at this point of time. Alcohol tariffs continues to remain one of the key points that continues to go ahead and delay the entire negotiation process. On the back of that, sentiment negative as far as USL is concerned, it will be an important trigger as and when this particular deal does come to fruition.
Okay, all right, Vivek, thank you very much for that. United Spirits in focus there. We'll take a quick commercial break here. And look at that, right? I mean, 40 points higher on the Nifty, 19,700 plus. And it's basically about an 80-point bounce from the day's lowest point. So looking very, very good. We'll take a quick commercial break here. We'll come back, and on the other side, our special segment, it's the economy. My colleague Lata will connect with Samiran Chakrabarti of Citibank and Mitul Kotecha of Barclays to discuss India's inflation picture, the trade data, and more in the special conversation. Stay with us.